Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend all. Ira Epstein of Linn Associates with your metals market update for this weekend, coming up of February 24th, 2017. All right, my friends, and looking at the market, the gold had a stellar week. That's number one. It's broken out to the upside. If you're watching my daily videos, you had an idea of that. But for those of you that are subscribers of mine and see the morning subscriber video, that's really where all the action is. And I have a special offer for you on that today. But if you take a look at this, you can see how the market settled strong. It's actually going to be the settlement price of $1258.30. Silver powerful. I was looking for resistance in this market up into the 1835 level, but more important, it's over the 200-day moving average of closes. Copper came back a bit, but it got hurt this week, and the platinum market suddenly came alive. Late in the day here, the dollar index has come back. It was down a lot more than this. It's regained everything there. It came back about 40, 50 points. And you are still looking at somewhat lower real interest rates, which is fascinating. I think that what you're getting in the metals, and I think you have to concentrate on this, is each weekend we go in now, the polls in France and the Netherlands are coming out, and they're giving you an idea of the populist movement. Are we going to see what the pollsters don't expect, which is we're going to get people to win in those countries that want to break away from the EU. If that is in fact the case, watch out. And that's one of the reasons I think the metals are up. And it's another reason I think you're seeing buying in the bonds and the notes. People scared. In looking at the gold monthly chart, you can see how the market on the monthly's got a pattern of lower highs, lower lows, but you're staying now over the 18-month moving average of closes. Very important. Resistance back up on the monthly chart at 1304, support 1212.10. But you don't have a bullish configuration in this chart at this point. When we come to the weekly chart, I'll take off all the indicators, and you can see how the market came up, stepped back, came back up. When I put on this chart just the closes, you get to see how it's come up very nicely in the neighborhood of $136, $137 or so. Am I right on that? About that, yeah. So we're coming back up $132. So pretty good move on a closing basis. When we look at the swing line study, and I do use swing lines in a big way on these charts, I look at a market that made a peak, set back last week, and now we've gotten through this higher area. Therefore, the trend is up because you have a pattern of higher lows and higher highs. The risk associated with the pattern is to not take out 1217.30. In addition, the market is trading over both the 18-week moving average of closes and the 100-week. And notice how the 18-week skidded right to this number, and it's trying to turn back up. That means the market is picking up momentum. Another thing, even if the market were to break under 1217, you should expect that good support would be uncovered at the combination of those two averages. I'm not saying it's going down there, just showing you what it is. A potential resistance point might be the 1294 area right now, which is the upper Bollinger Band, and momentum on the chart overbought. But let me explain slow stochastics on weekly charts. I don't put anywhere near the faith I have in them that I do on the dailies. So I like to see it, but you can stay overbought or oversold or embedded for very long periods of time. Here you had a market that just stayed overbought forever and you were drifting. It's an indicator that I think you have to look at, but I don't put the emphasis the way I do on shorter term ones. When we come to GLD, the gold ETF, same thing here. Higher lows, higher highs. Now here the 18-week moving average got under the 100. Will it turn back up for a bullish crossover is the question. That was called a bearish crossover when it got under it, but notice price was never under those numbers. Therefore, a false reading. That's all that you call it. But not even a real bearish crossover. Yes, the average went under, but you need price to be part of it, and it didn't do that. So now the question is, can you cross back over? It's only 30 cents away, so it could easily happen. We'll keep an eye on that. In looking at the gold miners, the bigger picture is still one of higher lows and higher highs, overbought, but still very much in an uptrend. The interesting part is on the last break, it couldn't get to the lower Bollinger Band, and on the rally, couldn't get to the top. Support a little lower, but the miners are not leading the raw metal. The raw metal is now leading the gold complex. In the silver weekly chart, my eye goes to higher lows, higher highs. Next stopping spot, if the market wants to surge further, could be the 1860 level. So still looking pretty good there. On the copper, I see that you lost the embedded reading. The combination of that with prices dropping down could mean a challenge of the 18-week moving average of closes at 256. Again, all this did is tell me that that raw bullishness is out of the market, and it can take forever to work off an overbought condition. I don't see anything just here right now. A big rally next week could re-embed it. Remember, one period, one time frame, and since this is a weekly chart, it's 1 week after this, it could regain it. That's the only time it can redo it. In the palladium market, I see an overbought market from the weekly chart. And again, I don't put all the emphasis there. I put the emphasis more on the swing lines, which are bullish, the higher lows, higher highs. You see that? And the market is trading at in between the 100-week moving average of closes and the upper Bollinger Band. So it's bouncing around there. Could run out of a little bit of momentum as it approaches that upper Bollinger Band. Palladium market has no pattern that makes sense just yet. It's got a lower low, a higher high. It's got a stochastic reading that if we take a look at is not embedded, just plain overbought. You don't have 3 weeks in a row, so I just leave that alone. Now in the dollar index, it's going to be very interesting. If this market can shoot back up next week over the 101.70 area, you could end up with a pattern of then higher highs, higher lows over the 18-week average. That could be very bullish. Conversely, what if it drops down? It can't set up a bear pattern. It can only set up a bull pattern the way this is set up right now. So we'll see if that develops. You put it all together, you get an idea of what's going on. So let me talk to you about my morning research. My clients pay for this. If they have a trading account with me, they pay one fee. If they don't, they pay another. So let's assume you don't, but you want to see what we're doing. Well, as you take a look at this, we've sent out to most people we have the email addresses for today and yesterday. We've sent them out a sample of what I did this morning today in both the written and sent them out what the exact subscriber video looks like. So look in your mailbox. It's probably in the junk area. But to go along with it, if you put in the code IRA20, capital I, capital R, capital A, 20, when you purchase, you'll see the area, you will get a $20 discount. Now, the normal fee for all this is $60 for every 30 days. So it'll go down to 40. If you're a funded account of ours and you do this, the 40 will go to 20. I don't do this very often. Don't look for this to hang around that often. But that's the way you get to look at the videos. You get the twice daily written updates. Sometimes there's more. I put out special updates. Some days there's 4 or 5 updates, to be honest. I put out oral if you want it, and that goes out at about 11:30 in the morning Chicago time, and then about 8 o'clock at night on Sunday through Thursday night. So you really get something from me all the time. In the commentary, you're going to find it really a lot of research. I'm this week writing about the oil and the changing of a contango to backwardation, explaining the differences, what it might mean. I go through an awful lot. I'm Ira Epstein. I'm quite bullish in the metals right now, and I'll be writing about that this week as well. You have a great weekend. Take advantage of the offer. I'll see you all come Monday.